Hello, this is Brian with Premier Trader University and netpicks.com. Today I'd like to take just a few minutes and talk to you about what are you risking when you trade. Risk is probably one of the most important ingredients when it comes to becoming a successful trader. Understanding what you risk on every trade is very key. I'd like to share a personal experience with you from my recent vacation. While on vacation, I had the opportunity to do a little bit of gambling, and I played some blackjack. I have to be honest with you and say that normally I don't gamble very much, maybe once or twice a year, and it is always for fun, and it's not to really kind of quit my day job and make any kind of real money. So it's just for fun, entertainment purposes. But as I sat at the blackjack table here recently, there were a lot of parallels to trading as I watched the player on my right side and my left side and how they engaged the dealer, so to speak. So first of all, I want you to understand in blackjack, the house has a 57% winning edge. That means us as players have a 43% winning edge if we do everything correctly. Now, what I want to talk about here is specifically the risk that each of these players put on and how they set themselves up for failure from the very beginning. So when I came up to the table, I knew what I was going to risk. I applied good trading principles, and I wanted my risk to be right at that 2% range. So I put $200 down, and the minimum bet in this case was $5. So in that case, I'm risking 2.5% per hand. With $200, I could lose 40 times in a row. And, that's really rare that would happen. In fact, in a second, I'm going to show you a slide that shows statistically that really should never happen. But as player A sat down, I'm going to refer to him as player A on my left side. He was behind me to begin with, and I heard him talking about how he really couldn't afford to play, and that he didn't want to basically risk, his last few dollars on this, and him and his wife were having this discussion. And so when he sat down, I looked to the left to see what he was going to risk, and he threw down $50. And in my head, I'm going, oh no, that is a recipe for disaster. If he loses at $5 per hand 10 times in a row, he's bankrupt. But the other thing that I want to point out about this particular case is he is risking what I call scared money. He is not going to go to zero in this case. He's going to go down maybe to negative 30 and stop. He's not going to go all the way to bankrupt. Okay? So never ever trade. Here's parallel one. Never ever trade with scared money when it comes to trading. It's too emotional. You're too emotionally attached, and you'll never really let it go down to zero, will you? You're going to stop at some point before that. So player B sits down to my right-hand side. And he throws down $300 right away, and I think to myself, oh great, he's actually in a better position than I am at $200. But the problem with him was his first hand, he threw down a $25 chip. So he's better than player A, but not by much. He can lose 12 times in a row and be bankrupt, and he's risking roughly 8% per hand. I'm going to flip to a slide that's really powerful here in a second, and you can see why statistically these two players, player A and B, set themselves up from the very beginning to fail. This is a very powerful chart that shows you statistically how many losses you can expect in a row based on the system that you're looking at and its winning percentage. All right, so let me set this up here. This column right here on the left-hand side shows us the percentage winning of our strategy, whatever it is, whether it's a trading method, or in this case, I'm going to talk just more briefly here yet about blackjack. Blackjack has a 43% edge for us as players, so right in here. So let's just bump it up and be positive and say we have a 45% winning edge, which is a little better than what we have. And when we go across here, you're going to see that we have a 100% chance that we're going to lose 6 times in a row. Okay? That's a given and a guaranteed. If we move over to the right one more position, there's an average chance we'll lose 7, and there's a 10% probability that we'll lose 10 times in a row. Now, if we go back to the example that I showed you a second ago, player A sitting down with $50 has a fairly good chance of going bust, all the way. And I will tell you that's exactly what happened. It wasn't very long, not too many hands, and he was done. So let's talk a little bit about trading and how this parallels. When it comes to trading, we like to see our systems in this area, in this 65% area. And let's go across here and kind of analyze what that means. There's a 100% chance that we will have 3 losers in a row, an average chance that we'll have 4, and a 10% probability that we'll have 6 to 7. And on the outside worst case scenario, we'll have 13 losers in a row. So it's very important to understand these numbers and expect that in trading you're going to have losses. I don't care what the methodology is. When this is your winning percentage, expect this. You know, in some cases we'll have methods that get up in this area, which is even better, but notice it doesn't improve much in this column. There's always a 100% chance of 3 losses in a row. What improves is out here. What I want to do is take you to the next slide, which reinforces how much we risk per trade, and then not only that, controlling our drawdowns and making sure that we never ever draw our account down too much because it becomes impossible to recover. All right, so this chart is showing us drawdown to recovery, and the left-hand column here shows a 5% drawdown, 10% drawdown, what it takes to recover back to that watermark, that level that you were at before. So if you have a 5% drawdown, it takes 5.3% gain to get back. That's very doable. All right? You can definitely recover from that situation. If we move to 20%, it takes a 25% gain to get back to zero, so to speak. All very doable. Where this really starts to get out of control is when you have a 25, 30, 40, 50% drawdown. It takes 100% gain to get back to zero. I guarantee you the trader that gets to this point, 50% down, is going to be pretty much done because it takes 100% gain to get back just to square one, not accounting for trying to be positive and have a profit. So let's go back to the losing chart for a moment and apply what we just learned about drawdown to this chart, and it will kind of tell us exactly where we need to be on a trade-by-trade basis, or if you want to apply it to blackjack like I did, on a hand-by-hand basis. So if we risk 1% per trade and our system wins 65% of the time, again, that's the sweet spot where we like to develop our systems and try to have them be at. If we have a 3 losing streak, 3 losers in a row, we're down 3%. 4 losers in a row, 4%, and here's that 10% probability, 6 to 7. We would be down 6 to 7%. That is all very recoverable, right? You can definitely come back from that based on the statistics here. 10% only takes an 11% gain to get back to zero. So we're well within that range. But let's flip back up here and see what happens when we go to 3%. All right? We recommend a range between 1 and 3, but when you go to 3, it's going to escalate what it takes when you have these drawdowns. It's going to escalate that process of getting your money back, so to speak. So 3 losers in a row, you'd have a 9% drawdown. 4 would be 12. 6 to 7, you're looking at up to a 21% drawdown. And worst case scenario, 13 losers in a row would be a 39% drawdown. That's pretty significant, right? That's the worst case scenario, but still pretty doable. I mean, you're in that 30% to 40% range. That's starting to get a little painful, but that's on the outside of things, outside range of possibilities there to 65%. When you start to go past that 3% zone, risk per trade, that's where things escalate here to a point where you just can't recover when you have those series of losers. Okay? So when it comes to trading, we recommend that you keep your risk per trade in that 1 to 3%. Hopefully you can understand that and why the math of that makes so much sense. Too many traders I talk to, want to try to out of the gate, hope for that success, and they're trying for 5% risk per trade, 10%, like player A in my blackjack example. And what happens is they end up ultimately having those series of losers in a row and busting their account, so to speak, just like player A did. Don't trade with scared money is the second point that I want to make here. If you are too emotionally attached to your trading capital, you will not be successful. I guarantee it. Okay? You're going to make decisions that will not allow you to be successful because you're not going to take that unfettered, unemotional setup each and every time that you should. You're going to start to second guess your trade setups. I guarantee it if you are concerned. So if this is rent money, if it's money you need to live, don't do it. And finally, do everything you can to protect and limit your drawdowns. You got to protect that trading capital. It is the lifeblood of your trading business. And as soon as it's depleted, your business is done. It's plain and simple. So that's pretty much what I wanted to share today. If you have any other questions or would like to check out some of our trading systems, you can do so at www.netpicks.com or PremierTraderUniversity.com. Thanks again and have a great day.